Earlier in July, for our clients, we recommended that they should actually add a little bit of money to fixed income. So we added some money into the intermediate part of the fixed income curve. And historically, when you look at economic cycles, when you're heading for a downturn, you want to be in the safety of bonds. And we saw that. And we've seen yields fall here most recently. So it's worked out. However, long-term yields, when it comes to fixed income and our recommendation on how to be invested in there, their biggest risk is the amount of debt that needs to be issued over the next 10 years, really. We're looking to increase our federal debt to over $40 trillion in the next 10 years. That is a lot of supply that needs to be absorbed by buyers. Typically, the U.S. has always been the biggest treasury market for purchasing. A lot of it has had to do with the U.S. dollar being the reserve currency or the fact that we've just had the most attractive yields. Well, now that yields have kind of risen globally, that's not necessarily the case. So we've seen really sloppy auctions this year, and we're concerned that the supply may actually outstrip some of the demand. So we are keeping, when it comes to fixed income, a very defensive approach within maturity ranges. Stick close to that intermediate part of the curve. That's going to help mitigate interest rate risk, but it can still offer you some price appreciation as well. When it comes to credit, again, it's an area I'd love for us to get into. The issue with credit is it still is expensive in a historical context. It's gotten a little bit cheaper here in recent days with the equity market sell-off because it does tend to be correlated, but still not offering enough reward for that risk that you're going to take on. In addition, we are starting to see some delinquencies rise. That's definitely not good for corporate bonds, so we'll be very careful there, but waiting for opportunities in that market where we think that you're getting rewarded for that extra risk.